Welcome back to the Deep Dive. We're here again to cut through the static and get straight to what matters. Today, we're looking closely at Computer Age Management Services, CAMS. We'll be unpacking their Q1 results for fiscal year 26, plus some other key updates. We've got the official docs right here, the board meeting outcome, the investor presentation, the press release, even the dividend notification. Our goal, to figure out what this all means for CAMS performance, its main business, how it's branching out, and, well, what it means for you. Let's get into it.
Okay, so diving right in, the first thing that jumps out, really, is CAMS management calling these strong results. This is for the quarter ending June 30th, 2025. If you look at the consolidated numbers, revenue hit 354.15 crore rupees. Now, that's up 6.9% compared to last year. Decent growth. There was a tiny dip compared to the last quarter, about 0.6%, but, context matters. Their EBITDA margin stayed really healthy at 43.7%. EBITDA itself was 154.82 crore. That's up 2.8% year on year. Shows good efficiency, good cost control, consistent.
Yeah, that margin is pretty strong. Suggests the core operations are humming along nicely. And speaking of good news, especially for shareholders, that board meeting on July 30th, they approved an interim dividend, Rs11 per share. So for you listening, the key date there, the record date, is August 8th, 2025, and they expect to pay it out by August 29th. It does make you wonder, though, how are they balancing dividends like this with, well, needing cash for all these new areas they're exploring?
That's a fair point. It suggests pretty strong confidence, right? Good cash flow. They can reward shareholders and fund growth. Like their MD, Mr. Anuj Kumar, said, they got these results despite global headwinds. He put it down to resilience and unwavering execution focus. So it sounds like they believe they can handle both, which is, a good place to be.
Okay, so the top-level financials look pretty solid, but let's get into the engine room, right?
Yeah.
What's driving this? It always comes back to their massive presence in mutual funds. And these numbers, well, they really underline how vital that core business still is.
Oh, absolutely. It's quite impressive when you look closer. Their assets under management, AUM, crossed a huge milestone, 50 trillion rupees.
50 trillion. Wow.
Yeah, and their market share is still dominant, around 68% of the total AUM. Overall, AUM grew 22% year on year, which is pretty much in line with the whole industry. But look at equity assets specifically. They passed 25 trillion, reaching 26.7 trillion. That's 24% growth year on year, which is actually faster than the industry average.
It's ahead of the industry. Okay, that's interesting.
Yeah, it shows they're not just riding the wave, they're, outperforming a bit in their key area.
And it's not just managing the money, it's bringing new people in, right?
Yeah.
Especially with SIPs. The systematic investment plans, those numbers look strong.
Very strong. New SIP registrations hit a record 11.2 million?
11.2 million new ones.
Yep, up 19% year on year. And that boosted their market share in new SIPs by 6 percentage points
Check out.
to 67%.
57%. That's quite a share. What does that tell you about their tech, their reach?
It tells me their platform is incredibly effective at onboarding. They're capturing the lion's share of new regular investors. It's efficient, it's wide-reaching, and you see it in the overall investor base, too. Their unique investor count crossed 41 million. That's up 27% year on year.
Which you said was faster than the industry's growth.
Right. Industry grew about 22%. So CAMS is adding unique investors faster. That's the fuel for future growth.
And they're adding new clients, too, new AMCs.
Yes. 3 more went live this quarter out of 7 they recently signed up. The big one, of course, was Jio BlackRock MF.
Ah, yes, with that massive NFO.
Exactly. India's largest ever new fund offer pulled in, 17.8 billion rupees.
So landing a client like Jio BlackRock,
Yeah.
what does that signal for CAMS competitively?
It's a huge endorsement. Really cements them as the partner of choice for, major new entrants. They now handle 23 live AMCs. And there are 4 more in the pipeline expected in the next 3 to 6 months. Plus, they mentioned their first international MF client went live Bank AMC in Sri Lanka.
So expanding horizons, too.
Yeah, dipping their toes into international waters while locking down the domestic market.
And underpinning all this growth, the operational numbers must be scaling up significantly, too.
Oh, definitely. You see it in the transaction volumes, 244.3 million transactions this quarter. That's up 28% year on year. And systematic transactions, mostly SIPs, hit 203.3 million. That's up a huge 34% year on year.
Wow. Processing that kind of volume increase smoothly is key.
It really highlights their tech infrastructure and just operational capability.
Precisely. Which brings us to the other side of the CAMS story, the diversification.
Yeah.
Moving beyond just mutual funds, the reports noted that these non-MF businesses are now, what, 13% of the total revenue?
Yeah, 13.0% in Q1, so it's definitely becoming a noticeable chunk. And there's some interesting progress there. Take CAMS KRI, their KYC agency. They're buying the KRA business from NSE Data Analytics. That adds another 1.3 million KYC records, a consolidation play.
Okay.
They also onboarded a top 5 broker and got ISO certified first KRA to do so focusing on scale and quality.
Makes sense. What about CAMS Pay, their payments arm?
Big step. Their own payment gateway for cards,
Yeah.
MasterCard, RuPay, Visa, is now operational.
So handling payments in-house more.
Exactly, vertical integration. And their assisted revenue grew 26% year on year. They signed up 21 new clients, including 3 from the insurance sector.
Spreading their reach. And CAMS Alternatives, the
Totally.
platform for alternative investment funds.
Still leading the market there, they secured 50 new mandates. That includes 24 completely new clients and, interestingly, 3 clients in Gift City.
Ah, the International Financial Center. Strategic move.
Seems like it.
Yeah.
Their assets under service crossed 2.7 trillion rupees. Revenue up 11% year on year, so steady growth. And CAMS Rep, the insurance repository, that saw really strong growth. Policy base up 41% in a year to 12 million policies. They still hold over 40% market share. And they're expecting LIC, the giant, to go live with insurance accounts next quarter.
That could be huge for CAMS, right?
Potentially, yeah.
And they're pushing tech boundaries too with Think360.ai.
Right, their AI and data science arm. They're building an AI platform, apparently an industry first, for a U.S. health tech company. And their Cakewick.id solution for video KYC went live with a major credit card issuer, driving a lot of volume there.
So leveraging AI and digital ID quite heavily.
For sure. And then there's CAMS FinServe, the account aggregator.
Right, the AA platform.
It's got 94 financial information providers, FIPS, think banks, MFs live now, and 176 financial information users, FIUs, like lenders, advisors, also live. That whole AA ecosystem is still developing, but CAMS is clearly positioned right in the middle of it. It's about securely sharing financial data with consent.
A key piece of the emerging open finance infrastructure.
Exactly. And one more, MPS CRA, the record-keeping agency for the National Pension System, that saw really impressive 92% year-on-year revenue growth. They've grabbed over 10% market share in the retail segment now, and they've got 2 major banks integrated onto their platform, so making serious inroads into pensions.
Okay, quite a lot happening beyond the core MF business. It's worth noting, too, the financials mentioned a small loss share from their joint venture, MF Central. About 25.7 lakhs, with CAMS putting in about half a lakh during the quarter. Just shows their involvement in that industry utility.
Right, it's part of the bigger picture. And if you sort of step back, you see how these pieces connect. Their operational strength is clear, but they're also focused on things like ESG. They've done their greenhouse gas inventory, working towards net zero, published their sustainability report. CSR focuses on education, health, women empowerment. They get good ESG ratings for governance.
So sustainability isn't just an add-on.
Seems integrated, and it ties into their tech investment, too. The AI stuff from Think360, the payment gateway, that quick 10-minute KYC from CAMS KRA. It's all about using tech for efficiency, for better customer experience. It feels like a comprehensive strategy, building for the long term.
So wrapping this up, we've seen CAMS deliver a pretty solid Q1 for FY26. The core mutual fund business is still growing strongly, holding that dominant market share. But importantly, those beyond MF businesses are showing real progress, driving diversification and bringing in new tech. They're definitely not standing still.
Not at all. Which leads to, I guess, a final thought for you, the listener. CAM has this dual strategy, right? Keep the core RTA business rock solid, but also expand aggressively into these other financial service areas. How do you think this balanced approach might help them navigate whatever comes next in the market? How could it, maybe redefine their role in India's whole financial ecosystem as it keeps changing so fast? What other doors might this unique position open for them down the line? Something to think about.